Alright, so the S&P 500 finally came down today. Now, it wasn't very much of a down day. We'll see if that leads to anything more and how much more it could lead to, and what kind of bullish momentum, and how do we reconcile the fact that the strong bullish posture and expectations of a exhale or near-term pullback or whatever you want to call that, how do we reconcile that? So I'm going to break all that down today in today's video. We're going to take a look at what's driving that price action here, one of the bigger intermarket moves that we saw today, and its impact across other asset classes. And then one area that did well, that actually cleared a pretty decent resistance, and how we can trade that. So let's go ahead and get started. Today is Wednesday, February the 6th, 2019. This is the Market Outlook from MarketScholars.com. My name is David Settle. Alright, as always, let's start off with the market forecast indicator on the S&P 500, and you can see a small little down day here today. You can barely see that candle is so small. In fact, the range is 13, just under 14 points, when the average range is at 37. So we are way below average on the range. As you'll see, in the volume is really light too. Not surprising that the short-term sentiment pulled back today, especially with the smaller range. The momentum line pulled over sold territory, but not to an extreme low point. So that's when you are concerned when it drops to an extreme low, which is not the case. When it gets to the 5th percentile lower, that's the extreme. So far, actually so good on that. That's actually a bullish signal. The combination of this oversold red line and this strong bullish posture, that's a bullish signal. Now, it's more bullish when you have the near-term line below 50, and that's not even close to being the case. So that's why I wouldn't put a whole lot of stock into that. Of course, the bullish momentum could very well keep pushing us up higher, though we should actually have had some kind of pullback in this area, if not in this 2600, and we're not. So we're continuing to push higher, and that momentum can continue to push. Just remember that the deeper you inhale without an exhale, eventually you run out of buyers, right? Eventually you run out of air, and you pull back. The red lines here are the Fibonacci retracements for the move off the Christmas Eve low point. So if we do pull back, that's where we can pull back to, and you can see, again, I've updated it with today's high. If I were to add on a few bars over here to the right, you can see now where that the Fibonacci fan intersects the blue retracement lines, which is the retracement, this dotted line here. The fans and the blue are these dotted lines, basically from high to low, and then the retracement up. So we're a little bit above the 62% line. If we were to fall back into this retracement area, you can see the bottom of it intersects with that fan over here right around 25.75 after, right about the time the cycle bottoms out too, and it would be also where that red Fibonacci retracement is, the 38%, kind of 38 to 50, but right around the 38%. So that kind of gives us an area of where this 2600 to 2575 area of where we may fall back to if we do, right? Of course, seemingly it seems like the market goes up every day. Well, it's only been down since this low point here on January the 3rd, which is the last time we were pink on the market forecast. We've only had 6 down days out of 23, so it's a good run. You can see market sentiment's rising as well. So strong bullish posture, rising long-term market sentiment, little weak short-term pullback. So far, it's very weak. And that's the same across all the major indexes. A little bit of a Harami pattern on the Dow Jones Industrial Average. You can see the Nasdaq also forming the same intermediate confirmation signal, but also lacking the near-term line being below 50. And then finally, the Russell 2000, same thing, more of a weak near-term, short-term pullback. Coming, but still with strong bullish posture and rising long-term market sentiment. So again, as I've said before, the posture is bullish, so it doesn't mean we can't make bullish trades. And just because there is an anticipated pullback also doesn't mean we can't make bullish trade. It just means that's a big risk factor that's prevalent, as you'll see across all these technical indicators. That risk factor of a pullback, whether we get it or not, the risk factor that we could get one and where it could drop down to, can impact any, especially your swing trades, your bullish swing trades that you may enter right now. So and we can't avoid it because there's always going to be something that will tell you not to make a trade. So you can't avoid all the risk factors. You just have to account for them when you see them. And this is a big one, right? How bullish we are. We just have to account for them when we see them by managing risk appropriately with smaller position sizes. A reminder before we look at some other charts here, subscribe to our YouTube channel. Click this red subscribe button right below the video. You'll also see sometimes our logo here in the bottom right corner of your screen. Mouse over that logo, click the red subscribe button that pops out. Click this thumbs up icon down here. Also, that lets us know, number one, you like the video today. Number two, it tells us that you want us to keep doing the videos day after day. So really quick and easy way to give us feedback. You can do that right now. Also, comment down here on anything that stood out to you from today's video. What did you get out of it? What do you think people, as people come to it to check out why they should watch it, let them know what they can get out of it too. Now, if you're watching our video on our blog, remember you can also like tonight's Market Outlook tweet right here by clicking that heart and then opening up this like and clicking that like button. Also, click this image. This will open up your Facebook Facebook account and take you to tonight's Market Outlook Facebook post. Make sure you like that too. Again, when you like those things, it tells us, you know, what you think of our videos, number one. It also tells them, Twitter and Facebook, that you want them to keep pushing you the content we put out there on those platforms. And again, you know, the worst, considering that all these platforms like engagement, the worst thing you can do if you don't like our videos, then don't click on anything. That's actually the worst thing that can happen when we put stuff out on Twitter, when we put stuff out on YouTube, when we put stuff out on Facebook. Finally, here's our calendar for our events. Make sure you check out what's coming up here. Participate in our forums by clicking on this link. You have to subscribe, but you can do that by clicking this image in the top right corner under Join Market Scholars, and you can do that for free. We continue to push slightly up above the 200-day moving average. We'll see how if that remains, if we finish up there by the end of the week. And of course, we are well up above the Hakinyashi. When you look at that, you know, we're close to the open, where you'd be worried about a transition candle, right? Because the transition candles are when you get the small body and the upper and the lower shadows, which obviously we're not. Unless we fall below, it's what the open today is 2644 and a half. At least the open this week is 2644. And if you look at it on the daily chart, you can also see too. Disregard these lines; these are for the weekly chart. But you can see how the Hakinyashi daily candles are really bullish. The bodies are getting smaller. We'll see if we end up getting some transition candles that may reverse it to the downside. But look how bullish the trend has been since that Christmas Eve low point when you got, and this is actually the Monday after, where you got the small body in the upper and the lower shadow, and then we've been bullish pretty much ever since for the most part. Now, if you look at the three green arrows, we of course still have three green arrows across all these three indicators. We're well up above the 8-day moving average still. We haven't fallen below that. That's kind of your first test. The MACD is still extremely high, relatively speaking. You know, if you look at the last few years, this is about as high as that MACD has gotten on an absolute basis. We were about this high. What's that here? What's our last value? We're looking at a last value of 35.68. So we'll edit this to be 35.68. Alright, so now if I zoom out, you can see we're a smidgen higher back in January. Remember, this is an absolute value, not a relative value, but even then, you know, we're as bullish now as we were there. And that was extreme, and it was crazy extreme in January. And that's the kind of move we're getting right now. So keep that in mind when you're looking, again, entering any new bullish positions. That wasn't necessarily the best time to enter new bullish positions back in January either. You can see as light as yesterday's range was, today's range was a little bit higher. It was actually a little bit of an inside day. Slightly lower high, slightly higher low, but pretty much right on with last week's range, or yesterday's range, which is also really small. You can see how the volume is really lightened up here. So when you look at the volume on SPY, was very extreme, 58 million, so way down below the average. Net average is dropping like a rock. And then today's range, 1.5 points. Very, very low volume, very low volatility. 1.5 points is below the average. The volume we had today at 58 million is at the bottom end of the 52-week range for that average. So they're already dropping down to really big time lows. The relative ATR, which looks at the price, the ATR itself relative to the current value, while today's value is below 1%, the ATR still hasn't. It's still at 3.6, so it's still got some room to go. And you can see, if I were to look at this, kind of zoom out a little bit on the daily chart, you know, when we're bullish, when that bullish trend is set, we will be below 1%. So the ATR gets really low, it gets below that 1% mark, and stays there. And we bounce up above 1% when we get bearish. So, you know, we still got some room to go before we get established in this bullish trend. The VIX has really dropped now. Still, you know, hasn't quite broken below 15. It's been flirting with getting below 15. Hasn't dropped below 90% here either, and that's going to act as a support level for it. So we'll see if and when we do break. Last time we got here was that December the 3rd, and then that led to a bounce in volatility and eventually the surge at the end of the month. I don't expect we'll get another surge like that, but generally speaking, you can see, I don't know if this will let me go back far enough. No, it's not far enough there, so let's go. Let's see, it might do the 360. So back over here, when we did make that run in March, we flirted around with that 90% as a support and bounced, and then we had that bounce in volatility towards the end of March, and we had the retest low point. Then, and you can see we hit it for support a few more times before we finally broke through in early May, and that's when the bullish trend was established. A couple little hiccups, as you know, near-term hiccups, but and there's an intermediate low point there. No big extreme highs in volatility like we got over on this level, just the hiccups, but the trend was established, and we're not there yet. We haven't broken below the 90% mark to establish a new trend here without that retest, which would more than likely coincide with another bounce off of this 90% level. It doesn't mean we can't float around here for a while, but the expectation is we'll probably get up to 1 before we'll get down to 0.8 based on that pattern. Of course, anything can happen, but that would be the expectation. So to summarize, the posture is strongly bullish, rising long-term market sentiment. So, you know, and about as extremely bullish as we've seen since last January, when things were just haywire, so bullish and so far up above moving averages. Well, that's where we're at again. Now the question is if and when and how deep any kind of pullback will be. And we're getting a little bit of a weak pullback, the beginnings of a weak pullback now. How strong it ends up being it can be anything, but as of right now, it's very, very weak. Not something. And again, any expectations of any pullbacks are not going to be like opportunities to make a lot of bearish trades or big bearish positions, right? We're not looking for new bearish trends or bear markets. We're just looking for choppiness and volatility with some kind of retest low point like we've seen before. How that form takes place, we don't know. And when it will happen, we don't know. We have an idea with the Fibonacci lines and retracements we've drawn of how deep we might pull back and when that might occur. But that's just a projection and speculation, and nothing that we would trade bearish trades on going against this trend. But we can account for it in terms of, you know, how we manage any current bullish positions we have that may have some profits in it over the past few weeks. Also, how we manage any new bullish positions we may want to add. We need to account for that risk factor of any deeper, maybe intermediate pullback, like that hiccup that we just haven't gotten yet. So what do you think? Do you agree with that or do you disagree with that? You can click that poll popping out in the top right corner of your screen, then hit either agree or disagree. If you click disagree, scroll to the bottom, comment on what you're seeing that would suggest something different. Maybe we don't think we're going to get the retest, or maybe you think we are going to get move all the way back down to 2400. If you see any technical signs that would suggest either of those outcomes, let us know in the comment section below. Remember, sign up for our daily Market Outlook email that we send out that has a timestamp summary of what we cover in these videos. Also includes daily watch lists of overbought and oversold clusters. Right now we're not getting any oversold clusters in the S&P 500, but we are getting a handful of overbought clusters. So make sure you get that, sign up for that email to see what those stocks are day in and day out. Follow me on Twitter for more content like this in between videos from day to day, and join our Market Outlook community that we've created on Facebook, of course. You can also subscribe and participate in our Market Outlook forums on our website at marketscholars.com. Alright, now let's take a look at what's driving price action today. You can see crude oil had a big jump here early in the morning on inventory data that pushed it from what was a more than 1% loss up to a 1% gain before pulling back by the end of the day. Emerging markets struggled all day long and finished lower. You can see gold also, with the dollar strong. The dollar was up all day long today as well. If we take a look at a daily chart for the greenback, you can see we've had a little bit of a bounce. We've got a little bit of a consolidation pattern going here with a now renewed bullish intermediate posture and strong short-term sentiment. If you look at it here, on the weekly chart, you can see a nice little bounce as of right now this week off of that 200-day moving average and back up above the 50-day moving average. Last time we had that pattern, we rallied for a few weeks before topping out again. Remember, we are right in the middle of the retracement zone of this bounce. This pullback that we've had, we've now bounced into the retracement zone. Now we're stuck in the middle. So until we break out of it one way or the other, to the upside or to the downside, it's gonna be kind of in this stuck neutral zone. And that puts pressure, a rising dollar, if we're bouncing, will put pressure on emerging markets. See the long lower shadow developing above there. Gold also has been so bullish here with the weakness in the dollar. You can see a little bit of a piercing line candle, or dark cloud cover, candlestick pattern, which would be a bearish reversal pattern coming from what is, we were pretty strongly up above the 50-day moving average. So at the very least, pulling back down and making a little bit of a test run towards that 1300, all because of the strength in the dollar. You can see yields. The 10-year yield really did not go up today. It was relatively flat. And if you look at the yield expectations here, right here, the rate hike expectations for the rest of the year, we're down to 5.7% from 6.8. We're rising in rate cut odds. In fact, the rate cut odds are just about twice as high as the rate hike odds in 2019 by the end of this year. But neither are really high. They're both really low. The odds that we'll just be here the rest of the year at current levels, 2.25% to 2.5%, is very high. Of course, when you look at the international markets, the U.S. was down, had been one of the better performances. Italy was up today, up 0.25%, but everything else, including Brazil, look at Brazil dropping 4%. China was down. Remember, these are way up above other moving averages. So China was down, Russia's down 1.5%. India was flat, but coming well off of its highs. Korea also down 1%, and then your major developed markets, Japan, we're beating Japan, we beat Germany, and we barely, a little bit beat UK, all above relatively high moving averages, all giving opportunity for pullbacks down to and filling in the space towards what is still now a rising moving average in all these areas. From a sector rotation standpoint, you can see utilities and staples and healthcare all outpacing the broad market, safe haven areas. Technology also doing well. You'll see why here in a second. The biggest outlier to the downside, in addition to real estate and of course materials and energy with the strong dollar, those two are dollar sensitive areas. They lagged behind, but communication services, and that really came down to Activision, Take-Two, and Electronic Arts, all down 10% or more on really strong volume on earnings related issues. You can see a couple media companies as well not doing so strong. On the other end of the spectrum, you have semiconductor stocks, Micron, Skyworks, Microchips, Texas Instruments, all of these doing very, very well. Applied Materials, Xilinx, all up strongly today. And of course, healthcare was your other big winner. Boston Scientific, Anthem, Bristol Myers, and Gilead all performing well from a healthcare perspective. Those are your biggest winners from a sector standpoint. Alright, one stock that's showing a nice little pattern here, continues to show a nice little pattern, has for a few weeks, is Applied Materials, and it had a decent bounce today, a little near-term bounce coming off of a near-term low point, strong bullish posture. You can see the bullish posture started, we turned dark green here at the same time that the moving average turned dark green. So good combination for a good bullish trend. You take a look at the 3 green arrow chart, you can see the spike in volume that we had today. One of the stocks that did well in that semiconductor sector, spike in volume, 3 green arrows. If you take a look at the 3 green arrow chart for Applied Materials, you can see we basically are bouncing off the 50-day moving average. MACD and stochastics above their moving average, still pretty high, so we have to account for that with probably a smaller position than normal. If you take a look at some of the other indexes, and something that stands out here in the other charts is that we're breaking through a pretty big volume node, which is the reason why we've paused here. But we broke out with some good volume today. So now you can see until we get to about $50, where the next big volume node is, we have some room for it to rally. But remember, we're kind of strongly overbought on the MACD and stochastics, and the bandwidth is relatively high, so we might kind of consolidate up to the upside slower than what we've seen to start bringing some of those things down. That being said, we could say, okay, well, if we just did a normal bull put vertical, it's not sexy, it's not a big return, but it's a high probability trade. Selling the 30 delta, buying which would be the 38 strike, and buying the 36 gives me a high probability. I'd have to finagle that spread a little bit because it's a relatively wide spread. So just move it to where my expected price is smallest number that I see, and see what I can get on that. The goal is to get at least 47 cents because that's a 30% return on risk. And of course, if we did that, that's where the break-even point would be. So we'd have to break through this old high point that we are, or break back down below that old high point that we just barely broke through. And there's some volume that's going to hold us up now in this area right above it. Lots of volume in this area right above it. Of course, if we break down there and then we end up losing, what would that be, $48, then that's our cue to get out of it. It's going to be right around that $37 mark. So we're looking just a little bit below where that break even is. So that wraps us up for today, and now I want to hear from you. So click on that link that's popping out with a link to the forums. Remember, you have to subscribe to our site to be able to participate in our forums, but you can do that for free there. But I want to hear from you now. What do you think? Any questions or comments that you have for me? Anything that I talked about in the video, or any questions or comments on anything I did not talk about in our video? Go ahead and post those, and let's keep that conversation going in between videos here with other market scholars between now and tomorrow. So, and going forward from there. So as always, thank you again. Remember, subscribe to our YouTube channel, click that thumbs up icon, and comment on what you got out of the video tonight. Follow me on Twitter for more content like this in between the videos. And then finally, join our Market Outlook community on Facebook that we create on Facebook, as well as our community of market scholars at marketscholars.com. Have a great rest of your evening, everybody, and we'll see you all tomorrow.